Hey, what is up, guys? Hope y'all are doing good. I'm doing well. Cannot complain on the 2.55% raw for the day. For the year, well, we are down 2.79% or close to $5,500. What's happening in the stock market is uh, pretty much expected. We have seen Trump going back and forth with his tariffs that he's implementing, and trying to exercise them against Canada, against Mexico, against China, and we're gonna get that pushback. So definitely, that's what is being reflected from highs of February 20th at $204,000 portfolio to now $190,000 portfolio within 2 weeks is no small feat. Basically, lost close to $14,000, and not sure how long it's gonna continue like this. But there are few factors that I wanted to point out because these things were expected, right? Azul in his video, he did focus and did share some information on this, like what he feels like and what's happening in the stock market. And same goes for the indicator. So if I open this tab here, there are few things that were pointing to the downfall of the stock market for 2025. Trump factor, of course, since the market of November, when President Trump took over the office or won the election. He came in the office in January. But if you look from here, we from November 5th, my portfolio balance was $191,000, little over $191,000, and current balance is over $190,000. So I've already lost almost $1,000 and more in the same market. And it's not like I'm playing gamble with the most of my money. Most of my money, or close to 80 to 90% of my money, is in market. So QQQs, then I have SPY and SCHD. These are the three top ETFs out there, and I've solid portfolio with, or as I thought I have a solid portfolio with all these. But since Trump took over, we are seeing the factors. We are seeing what he's capable of, and we are seeing what he has done to the economy already, right? Then we have sustained high inflation. Of course, inflation numbers are coming again. You could also feel it going to the grocery store. 18 eggs that used to cost $3 or $4 now are costing us almost $13. And I'm talking about Harris Teeter, where I went. It's a big grocery chain. So we saw that happening for eggs, and call it you know bird flu or whatever the reason be. But we are seeing inflation overall. The stock market could reflect the numbers. We are seeing inflation on other sectors as well, and that is why Federal Reserve is reluctant to keep the interest rate high. And that is the next point. It's a good segue for the inflation. We are seeing the high inflation, so Federal Reserve is saying no more cost cutting or no more interest rate cutting, right? And that is what is being reflected on our portfolio, because we were expecting four cuts, and at the end of the last year, for Federal Reserve to pop a pill to cut four times the interest rate, but we have not seen any yet, and we are at the almost in the middle of the last month of the first quarter. Then we have declining businesses sentiments, and a high consumer debt. Consumer debt, as we know, as a U.S., as a nation, we are big on consumption. We import a lot of our goods, and overall, the consumption is really high for most of the households that I personally know. There are very few people who live by what they need. In our culture, in our society, it has become a norm to have high debts, and have a big credit card limits, and we try to use them. If it is available, live it up, like the YOLO that we call it, right? So that's another factor, and that is taking the market down with it. And then high sky high government outlays that we are seeing already. There's a sun and a day and night difference between the policies of the two partisans that we have in government. Democrats and Republicans have their own, basically both. I feel both, not to be political here, but both are extreme of politics, right? And they both share their own things, their own views, and they try to push it to the average Joe investor, basically everyday people that are out there. So their impact does get reflected. And then market was also, like, the Wall Street analysts were also expecting a correction, not probably not this severe correction that we are seeing already. So within less than 3 months, we are already down. So if you just look at the SPY S&P 500 index ETF, which we call market, it is down for the year already, which is not a good sign for the first 3 quarters. It is down 2.58% already, right? So that's something that we were anticipating already, but now, since all these tariff wars came into picture, now it's more imminent that it happens. Then lastly, what can we do, basically, to avoid this market downturn? So one thing I'm doing with my portfolio, and I'm showcasing mine as an example to show you, uh, because this is what I live with. You can do the same, or if you think it's not a good strategy, you can avoid that as well. But point being, what I'm doing with my portfolio is I'm gonna start selling covered calls very soon on SPY as well, because when the market is going down and you sell covered calls just little out of the money, you collect good premium, right? And that's what you can reinvest, buying back more of what you sell the covered call options on. So if you see here, I was selling covered calls on QQQ, Nasdaq 100 ETF, as well as SOXL, the 100 shares that I hold, and I bought at $30 per share. So 100 shares I bought at that time. So I was selling covered call at $34, and then I'm also selling covered call on $575. Both are gonna expire worthless. This can I can close already. It's a month out already, and it is only at 1 cent. So giving $1, I can close this option already. While this one, I think I'm gonna roll this option, but I'm gonna roll it down. So maybe not $34, but because I'm not gonna get premium that is worth my weight, or this SOXL investment. So what I'm gonna do, I'm gonna sell covered calls on any 100 shares that I hold. So mainly QQQQ, SOXL, and soon to be SPY as well. So that's one thing, right? So that's how I'm generating passive income, by keeping my money in the stock market. Second thing I'm not doing is I'm not taking the money out. So what I'm doing is I'm selling covered calls. What I'm not doing is I'm selling out at the current price. When I see the market dip, I invest more money, and that's what I'm gonna do here, because eventually, maybe 2-3 years down the road, when we get back to these levels, I will have more shares, and then for with more shares, I will have a bigger portfolio value. So that's what I'm doing. Lastly, third thing, I am keeping up with my cash reserves. So I have 3 months of savings for my family expenses in my checking account. I don't use saving account for some other purposes, but I use checking account in order to keep cash. So that's what I'm gonna do. I'm gonna keep my checking account going, and that's what I probably be saving more money there as well. Make that 6 months instead of three. So that's what the plan is. I hope you guys will like this video, and hopefully we will all rise back up very soon with big good numbers. Thank you so much for watching, and I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.